All right, listen. In the spirits of Bitcoin absolutely tanking today, we're going to investigate MicroStrategy. Now, I'm telling you right now, this video is not for the faint of heart. It's not going to be highly edited. It's going to be a lot of information. I'm an engineer. I like to look at information to make decisions. And I wanted to look into MicroStrategy a little bit more because I don't know about you, but it seems like some of the stuff they're doing is a little fishy. As we work through this, it's clear that Michael Saylor is a very smart dude, and he took massive advantage of Bitcoin momentum in the past to buy a shit ton of Bitcoin. Now over 713,000. So again, last warning, I don't blame you if your attention span can't take this video format because it's going to be a deep dive into information that I found super interesting. I know you will too if you do stay and watch. Essentially just my thoughts as someone who owns Bitcoin, has sold Bitcoin, has bought Bitcoin, and an engineer who studies finance. So if that sounds interesting, stick around because this gets really interesting really quickly. Now there's 3 questions I'm trying to answer with this research, with this investigation. 1, what is MicroStrategy's strategy? 2, how could this strategy realistically fail? Is it foolproof or not? And 3, should I buy back into Bitcoin? This will not be financial advice as I'm not a financial advisor. I hope this video is helpful to you in some way. So first things first, how in God's name did a company obtain over 700,000 Bitcoin? We're talking about $46 billion. And you know what the kicker about all of this is? This company's not just a Bitcoin holding company, right? They do other things. Apparently they provide AI and software services, data analytics, whatever. That doesn't really matter. Let's just look at how much money they make. And it's impeccable timing because they just reported earnings, so we have the most recent data possible. Total revenues, $123 million. About a 1.9% growth rate year over year. Not that crazy for an AI company, that's for sure. So how did a company with $122 million of revenue buy $46 billion worth of Bitcoin? It's with a clever device called convertible debt. Now again, I'm an engineer. I'm not a finance expert. But after a little bit of reading, I think I have a good handle on this. And the strategy is actually crazy. MicroStrategy is going to issue bonds, IOUs, right? Let's say you got a lot of money, all right? And you buy $1 million worth of these bonds. We're going to get to why you would want to do that in a second instead of just owning Bitcoin straight up or buying MicroStrategy stock straight up. Okay, we'll get there, but hold on a second. If you were to buy $1 million worth of this convertible debt, and let's say when you bought this debt, the current stock price of MicroStrategy is $500. When you buy this convertible debt device, it comes with a conversion price, right? So let's say this conversion price is $750. That means right now you just own a bond that, get this, is paying 0% interest. You are not getting paid out anything for holding this bond. Obviously, that's not normal. Most bonds, like treasury bonds from the US government, you're going to get between like 2 and 7%, depending on how far out that debt maturity date is. But again, we'll get there, okay? You pay $1 million for this convertible debt that gives you the option to, you guessed it, convert your debt if the stock goes above this conversion price, this $750. Right now, keep in mind, the stock is $500. So yes, you can't convert it into stock, but the hope is as that stock increases in value, you'll be able to convert this debt into the stock and get that upside that you originally wanted to get. So now let's say it's been a couple months. Bitcoin is on an absolute tear. Therefore, MicroStrategy is going to follow it because they have about $46 billion worth of Bitcoin. Let's say price goes up to $800 per share. That is one ugly 8. Then if you bought $1 million worth of this convertible debt with a conversion price of $750, that means you have 1 million divided by 750, 1,333 shares. Price is now above your conversion price. So you're going to say, hey, I want the stock now. I want to reap the benefits of me holding this 0% debt. And you're going to get the 1,333 shares with $50 in profit per share. You're going to get something like $67,000 in profit. Great. Now we understand convertible debt. Why in the world does this allow MicroStrategy to buy so much damn Bitcoin? Well, think about it like this. You don't have any debt with MicroStrategy anymore. Remember, you converted over to stock. When you converted over to stock, guess what MicroStrategy did not have to do? They didn't have to pay back the $1 million that you originally put into this convertible debt. Now, I know what you're thinking. Why the hell would anybody buy a financial instrument like that? It's literally Bitcoin wrapped in MicroStrategy stock, wrapped in a bond. That's a little fishy sounding, but the premise is, as the stock goes up, MicroStrategy pays out $0. Now, I know what you're thinking. Why would anybody want any part of that? Why not just own Bitcoin straight up? Why not just own MicroStrategy straight up? Well, the idea is that it sounds more attractive to fixed income investors. I'm sure you're wondering why I have a bunch of pictures of elderly people on my screen. That's probably what you think of when it comes to bond holders, right? Especially nowadays. But like I was saying, it might be more attractive to fixed income investors because you don't take on the risk of, Bitcoin price dropping from 120,000 cut in half within about 4 months. Instead, worst case scenario, you just get your $1 million back. You're not going to lose any money. You get your $1 million back no matter what. It's a bond. It's debt that the company has to pay out back to you if the stock doesn't reach your conversion price. You have the right to say, hey man, we agreed by, September 10th, 2028 that if this stock price didn't hit $750, I'm going to pull the plug. I'm going to take my money back. You're going to have to pay me out. That's a pretty good deal for somebody who doesn't want to take on the massive risk that comes with Bitcoin's volatility, MicroStrategy's volatility. I think you get the idea. So we understand convertible debt. We understand why somebody might want to invest in this asset as opposed to the stock or Bitcoin directly, and how this helps MicroStrategy accumulate Bitcoin, because once you buy this stock, you are giving them cash to use to buy Bitcoin. When you buy stock, MicroStrategy gets cash, they stash it away, and buy more Bitcoin, right? That's the whole idea. And now, as you can kind of tell, their strategy is almost 100% dictated by how Bitcoin's price does. If it goes up, people are more apt to buy their 0% paying bonds in hopes that Bitcoin price will continue to go up. When price goes down like this, people get really nervous, around 17% today. And you can bet when you're really nervous about your money and you have no faith at all in MicroStrategy and Bitcoin's price as it plummets to the ground, you can bet that when this date comes around, you're going to be one of the first people to line up and demand your $1 million back, which means MicroStrategy has to come up with $1 million in cash. Now we get into the fun stuff. The first question we have answered: what is MicroStrategy's strategy? It's to accumulate as much Bitcoin as humanly possible. Now this is the fun part. How could this strategy realistically fail? Well, you can see here we have a list of some of the convertible debt that's out there right now. And if you pay attention to this last column here, you can see the conversion price. The price that the holders of this debt are hoping that the stock reaches by this date. We can see that MicroStrategy stock is not even close to the conversion price on any of this debt. And keep in mind, on some of this, people are making $0. They're just losing money to inflation in hopes to convert at a higher price or Bitcoin go up. Now, this is the number we have to pay attention to. When is the soonest point that MicroStrategy could have to pay out a lot of money to investors? Because until then, it doesn't matter. The best part about this strategy is that no matter what Bitcoin does, if it goes like this, goes like that, and then crashes like we're seeing today, MicroStrategy, Michael Saylor, will never be margin called. And I just now realized that my camera was not working for the last few minutes. Great. Let's carry on. The very first time that MicroStrategy may have to pay out a lot of money to bondholders is this one right here. The put date. The date on which bondholders may require strategy to repurchase their bonds. It doesn't necessarily have to go to maturity, but if this date hits and Bitcoin price is crashing, then I think people are more likely to say, hey, give me my money back. I don't trust this anymore. So this is where it gets fun. Let's do some math. We have $1.01 billion that could potentially be due for MicroStrategy to pay on this date here, which is about, a year and a half away now. So they do have time. But let's look at how much money they have right now. That's the only thing that matters. MicroStrategy is going to have to cough up $1.1 billion potentially to some angry bond holders that want their money back. Now, keep in mind, they're also paying a little bit of interest on this debt, but we're going to call that negligible at this point. Let's keep it simple. And like we already talked about with their earnings, this is an AI company growing at 1.9% year over year. Obviously, their operations aren't what bring value. It's their Bitcoin holdings. And because they've gotten so many damn people to buy their stock and cash in on those convertible bonds, they have $2.3 billion of cash right now. So if they were forced to pay back this 1.1 billion, they have $2.3 billion. They're covered. This is what they got right now, right? But year after year, those payments are potentially going to add up, especially when you get to 2028. You can see 4 rounds of convertible debt have a put date in 2028, meaning if investors want to cash out and get their money, they can, and MicroStrategy is obligated to pay them out. So again, this is hypothetical. Obviously, every single dollar is not going to be requested by bondholders on the same exact day. That would be absurd, and that would cause a lot of problems. But if we were just to add up the bills that could show up on MicroStrategy's desk on September 15th, we're talking about $3 billion, $800 million, $5.8 billion, about $6.4 billion of cash they're going to have to come up with. Now, obviously, with $2.3 billion in current cash in a company that makes $123 million in revenue, if we factor in operational costs here, $123 million in revenue minus $32 mil for sales and marketing, $23 mil for research and development, $37 mil for general and administrative. The company is losing $10 million from operations, right? So you're not getting the money from your AI business. That's certainly off the table. Again, we're not going to include a $17 billion Bitcoin loss because that's just some accounting where Bitcoin's treated as fair value accounting, which means if you had $1 billion of gains, unrealized gains on your Bitcoin last quarter, you would have reported $1 billion of gains in your earnings. But that also goes the other way. So if you have $17 billion of unrealized losses on digital assets, we obviously know that's referring to their Bitcoin holdings. Then you report that. Again, we're not going to include that. That's absurd. I'm just talking about the business is losing $10 million. That's not where the cash is going to come from. There's 4 different ways. That's one of them, so that's off the table. When the investors start yelling, pay me, one of them is going to be the business. How normal businesses make their money. They go out, they provide a product or service that provides you some value, and you're going to pay them in return for some of that value. That's not what their business model is, okay? So business is not going to be the option for cash. Number 2, selling common stock. Basically, MicroStrategy is always selling stock. It's this thing called ongoing at-the-market equity offerings. Again, it's a finance term. We don't need to get into all the fancy finance. Just know it's another way for them to raise money to cover themselves in the face of people wanting their money back. Now, again, this works really well when Bitcoin price is going up, because that means if Bitcoin price is going up, MicroStrategy stock is going up, and that means convertible bondholders are really happy. But again, when Bitcoin price go down, that means people are going to be really, really less likely to buy MicroStrategy stock straight up. Another way they get their money. Now get this, in 2026 alone, 1 month, January 1st and February 1st, MicroStrategy raised $3.4 billion of cash. Holy moly. So people are still very optimistic and still buying in. If they're buying in, they're raising money, they can cover their debts. So stock works until it doesn't. We're going to give this neutral. Obviously, when the stock's going down, you're going to be less likely to buy MicroStrategy stock. If anything, you're going to be more likely to sell it. But I think you get the idea. Once you buy that stock, you are giving MicroStrategy money to use to buy Bitcoin. 3 is preferred stock. Oh my goodness, this one is an absolute headache. And you know what? I'm not even going to go into great detail here. Feel free to research this one on your own. But I'm telling you right now, as an engineer, I did not like reading about this, okay? I'll tell you my 2 takeaways after a very, very brief summary. So they have these other 4 things here. STRD, STRK. Okay, you get it. Just some other funds that you can buy. We can look up STRD stock on the market right now, and you can see strategy, perpetual, stride, preference shares, series A, whatever. Doesn't matter. Essentially, these are funds that pay out a very attractive dividend. So if you're a fixed income investor, these are beautiful. You're going to get paid out 10% a year in dividends. That's a very attractive yield. And when you buy this stock, you give them cash. That's the whole idea. However, what you might immediately think is, holy wait, they're going to pay 10% dividend on all this money? Yeah, if you look here, they're going to pay out $888 million in dividends. So we were talking about $1.1 billion earlier. I mean, we can bump that right up to about $1.9 billion, just about $2 billion that they would have to come up with as early as 2027, including dividends. Now we're getting a little bit closer to this number where things get a little spicy. But remember, HODL. Everything will be okay. Basically, bottom line, these preferred shares are just another way for them to raise cash. It's called accretive dilution, I guess. Again, like, it doesn't matter. We don't care about that. This is just another way they can raise money, another complicated financial vehicle to do so. Maybe you want to buy it. Maybe these guys want to buy it. Cash is cash. So again, this works until it doesn't. We'll give it another neutral for now because that's fine. People are still buying the preferred stock. It definitely becomes a problem though when these stocks start to really fall. Because remember, this isn't your common shares. If anything, you only get like 1/10 of a common share for every preferred share you own, something like that. Again, there's all sorts of conversion things you have to look at to understand exactly how much you're going to get. But the point is, you don't participate in all the stock upside. You're really banking on those dividends to continue to pay you out and really give you that return. But if the face value of your investment, if you bought this at $100 and now you're down 32%, I mean, you're probably gonna be like, hey, that 10% dividend yield isn't exactly covering the 32% I already lost. But don't worry, in the event of an extreme liquidation event, MicroStrategy is gonna have to pay you out first. You're the preferred stock. If you have common stock, you're gonna have to wait till all these other guys get paid out. That right there is corporate capital structure. Very nice. So cool. Now the last option, and ideally never used because it would result in probably Bitcoin Armageddon. If you think we saw Bitcoin Armageddon over the past month or two, just wait until Michael Saylor starts selling his own Bitcoin to cover those debts. This one would not be good. We kind of look at Michael Saylor as the guy that keeps Bitcoin afloat, especially in these very grim looking scenarios. HODL, right? Hold on for dear life. Never sell your Bitcoin. If he's selling, there's some serious problems with his strategy. It doesn't necessarily reflect that he doesn't believe in the long-term prospects of Bitcoin or it as a store of value, comparing it to an asset like gold. It's just showing that this strategy, this infinite loop of getting money from investors and paying literally $0 for it, that's not going to work anymore. But again, worst case, he has 46 billion, which, hey, that's been increased since it was 45 billion just like 20 minutes ago. 46 billion in Bitcoin reserves. Worst case, he can sell some of that to get some cash. And of course, you can't make this stuff up. Today, Michael Saylor let us know that this strategy isn't going away. HODL, okay? Don't let go. Stack more Bitcoin. Now we answered, what is MicroStrategy's strategy? Buy as much Bitcoin as humanly possible. How does it realistically fail? Well, Bitcoin price goes down, which makes MicroStrategy price go down, which means convertible debt holders no longer get to convert their debt into stock, which means Michael Saylor and MicroStrategy have to put up the money to pay out these bondholders. And if they have to pay out these massive sums of money because their stock price isn't going up, then they have to raise money in some way, whether that be through their business, which isn't happening, they're losing money, whether it be through stock, which we're still seeing right now, but that could stop as MicroStrategy stock plummets. Preferred stock, which again, same concept as that plummets, people are less likely to buy. That's just how it works. And obviously they have the $46 billion in Bitcoin reserves. Let's hope it never gets to that point. So I guess the biggest question remains, should you buy? Because I'm not a financial advisor and because I'm just an engineer who was curious about this, did an investigation, learned a few things, and now I'm coming to a couple conclusions, that doesn't mean to buy or sell. But here's what my takeaways are. We're going to look at both sides of the coin. For people who think you should, I think the answer is yes if you have a super long-term horizon. Obviously, you still have to believe in the narrative that Bitcoin is this store of value. It's scarce. It has 21 million total coins. Blah, blah, blah. At this point, we know that's kind of went out the window. Today, it's certainly not being treated like a scarce asset. Gold has been pretty much straight up for the past year now. People think as a direct hedge to inflation, right? There's some intrinsic value. Bitcoin, on the other hand, is literally the exact opposite, straight down. It's trading like a risk asset, okay? It's not trading like a store of value. But that narrative could revitalize at some point. That narrative probably will shift, only time will tell. And another reason for yes is volatility is the price you pay for outsized returns. If you wanted a guaranteed 2 to 7%, you would just buy treasury yields and never look at it and get paid out your annual, quarterly, monthly dividend, whatever it is. I think the attraction of Bitcoin is that the upside could be tremendously high. Kathy Wood has the price target at 1.5 million in a bull case. Base case, 710,000, only about a 10x from here, 11x just about. So if you believe in the vision, then beautiful, beautiful buying opportunity. It's always good to consider both sides. For now, and probably the biggest reason holding me back is just the amount of debt on the horizon for MicroStrategy. Again, MicroStrategy is not Bitcoin, but when they're issuing convertible debt that is really just Bitcoin wrapped in its stock, wrapped in debt, things get a little fishy. And this debt could add up. Their business isn't going to save them. They need investor confidence to save them. And that looks like it could be the case because people are still buying up their stock like it. Maybe because he's tweeting out HODL every day now. But I think this just is a systemic risk factor at this point. MicroStrategy's become so integrated with the idea of owning Bitcoin that it has a major implication on investor confidence. At the end of the day, the stock market is just a vehicle for investor confidence. If it's low, people sell. If it's high, people buy. It's an oversimplification, but that's how I look at it at least. And we are way below these conversion prices, so this debt looks like it's likely to come due at some point. I guess we'll see. Again, it all depends on Bitcoin price. Who knows, tomorrow we could wake up, this could be all be invalid, and this thing could be at all-time highs at 125K. Nobody knows. This video was just an investigation into MicroStrategy's strategy, how it could fail, and what implications it could have on Bitcoin. It's getting late now, so I want to go to sleep, but there's one last thing. I think this Redditor post says it best. Michael Saylor was the earliest innovator when it came to this really creative financing strategy to just buy more Bitcoin. But at some point when these other companies start following suit, we've seen the same thing with Ethereum-backed treasuries, Tom Lee, the face of ultra bullish markets, right? Once we have the lower third of the S&P 500 index all doing the Saylor to goose their profits and Bitcoin is trading in the millions, and somebody F's it up because they took the Bitcoin wrapped in stock, wrapped in bonds, wrapped that in dog shit, wrapped that in cat shit, and then sold it to the Saudis. The point is, that's such a great line. The point is, things can get really fishy, especially when one person's doing it so well and other people just find ways to leverage up or take advantage of it in a market that's already fragile. So should you buy? I don't know. I've bought, I've sold. I'm interested at these levels, but maybe I'm the contrarian indicator that you need to go and make that purchase. Maybe I just marked the bottom. But at the end of the day, I'm not a financial expert. I just wanted to look into this and learn and understand exactly what the hell was going on, how any of this was even possible. How does a company that has $46 billion of Bitcoin, how does that even work? So I hope this investigation helped you in some way. If you somehow made it to the end of this video, I am extremely impressed by your attention span because I can only imagine how boring this must have been at times. Are there ways that it could fall apart that I'm missing? The whole preferred stock ordeal, this stuff just, I don't know. At this point, I was getting a little tired after researching for hours, and I was just like, you know what? They have to pay out dividends. Preferred stock's just another way to raise cash. So I'm sure there's a whole nother level to risk that I'm missing here. That's all I got. I just really hope this isn't the case. I know what Michael Saylor meant to depict here. He was trying to say, hey, Bitcoin may be crashing right now, but hold the line. Continue to hodl. But usually the boat captain goes down with the boat. That's kind of the whole idea, right? So he should probably be on the boat, not on some lifeboat, which represents the money that he has in Bitcoin that he could sell and absolutely screw everybody else that's on the sinking ship. We know what he meant, but geez, man, what a miss here. All right, hodl. Good luck.